Hello and welcome to our 2 cents. Today I'm going to talk to you about how to prepare for your income tax return. I'll start by showing you a few income tax slips that you can expect to receive in the mail, depending on your tax situation. So this here is a T4 slip. So you would receive this from your employer. The key is to, if you have more than one employer, to make sure that you have all of your T4 slips so that you can report all of your total income. Another possible slip, if you were on unemployment, maybe you lost a job, or if you are on maternity leave, then there's the T4E slip. This is another one that needs to be recorded in your total income. Additionally, you may receive a T4P if you're collecting Canada Pension, or a T4 OAS for old age security. Those two items do actually come in the same brown envelope that you get from the Canada Revenue Agency. Other slips that may be applicable to your situation include a T5 slip. If you've sold shares of a stock that you may own, or if you have a bank account, they'll send this slip. Usually you'll see here on box 13, interest is reported here from a bank account. It's a pretty typical slip that a lot of Canadians have. A T3 slip. If you have a mutual fund or a segregated fund, you don't necessarily have to cash out money in a given year, but if you have regular investments, then this is another slip that may be applicable to your situation. If you've gone to school, then you may have a T2202, which is a tuition slip. The important part on the slip here is that it will actually tell you what your total tuition paid was and the number of full-time or part-time months that you have. You may have a child that's attending post-secondary education and they may be transferring this credit to you, so this is something to talk to your tax preparer about. If you've collected workers' compensation, then there's a T5007. You do have to still claim an income tax, file an income tax return. However, any income that you make from workers' compensation is actually not taxable. Other slips here. So this here is a personal RSP that I've opened to show you. The key here is that it'll show the amount. In this situation, you'll see it's March to December 2015. So these are contributions I made to this particular account from March to December last year. I also have a regular pre-authorized payment, so every week when I have money come out of my account, I actually get a slip each week for $100. So you can see it shows the first 60 days of 2016. So it's my option if I want to claim this slip in 2016 for my 2015 return, or I can wait until I do next year's income tax return. The key is, if you've made RSP contributions, is to let your tax preparer know if you've contributed to the home buyers plan in the past or the lifelong learning plan. A couple of other items to note is if you've made any donations, so perhaps you give to the Canadian Cancer Society, Alzheimer's, etc., making sure that you have a charitable organization receipt for your claims. If you have any medical expenses, bringing those to your preparer. The government wants to know the date, the amount, and the type of expense, so whether it be chiropractic, paying for prescriptions at Shoppers Drug Mart as an example, any other devices that you may have purchased, hearing aids, walkers, etc. And you can also check the CRA website. We'll put a link on our blog to eligible medical expenses. And that's it. Stay tuned for our next edition of our 2 cents.